Hello and welcome to the July update. Can't believe that we are already into the second half of the year when where did the first half fly off? But then again, it has been a pretty testing year for most investors out there. So, yeah, where are we at and what's in store ahead is what I'll be trying to talk about. I'll encourage you to pause the video and have a look at our disclaimer. Um, so the center theme remains to be inflation. Um, I have talked about it many times. Inflation is the biggest problem, and that's causing all the turmoil that we see in the share markets. Obviously, there are other factors at play as well, like geopolitics and COVID, but to a lesser extent, inflation is the central factor, and um, what I've shown here is the inflation over the past few decades for New Zealand in the top left, UK in the bottom left, and then the US on the right. And what you can see is the charts are very, very similar. Inflation was pretty low for a long, long time, and then has started to rise very recently and is rising very, very rapidly, and currently sitting at a multi-decade high for many major economies in the world, and of course New Zealand as well is at 30-year high as per the recent figure this month. What is the major impact of high inflation is obviously interest rates have been rising. I've shown here again that the same three countries, the government 10-year bond yields for New Zealand in the top left, UK in the bottom left, and US on the right side. And again, the charts look very, very similar. Um, Yields have been dropping for most of this. I've shown 25 years in these graphs, and the interest rates have been dropping until very recently when they have started rising again. And uh, that has had the impact of asset prices pulling back across the board, whether shares, bonds, property. I talked about this late last year, that interest rates will have to start rising soon. And when that happens, asset valuations will pull back. And that's what has happened so far this year. So, where to from here is a really tough call, because inflation is not peaking at this stage. This graph is showing that inflation is still rising, unless inflation uh, apparently starts to go flat. I do not expect central banks to go easy at the pace at which they are raising interest rates. And what that means, in theory, is downside factor for asset valuation. So, could there be a further slide in share prices? Well, potentially, if inflation does not peak for months to come. But I still believe that inflation will peak sometime between now and the end of the year, so sometime over the coming months, and that'll be the turning point for the share markets, decidedly for the up. July so far has been a positive month. Touch wood on that. I do believe that is down to the factor which I had alluded to again in my previous video, that markets are forward looking. So a lot of the current negative news has been priced in. And that seems to be providing a bit of a floor to the share market. So far this month, July, has been positive for most share markets. But then again, as I said, inflation is still rising, so we are not out of it yet. But the most important part is, again, one chart that I showed in my previous video, and it's again here for you to see. Sorry, it's not really very easy to read, but the key takeaway from this chart is, again, the big dark blue mountains and the valleys in the yellow. The yellow valleys are actually when the share market, in this case the S&P 500, the US share market, has fallen by more than 20%. And the blue mountains are when the share market has gone up. And the key point I want you to focus on here is the mountains are way bigger and longer than the valley. So irrespective of what's happening right now, I know it is really uncomfortable, and at times can be pretty depressing to get through this winter of share market returns, negative returns. But rest assured, the markets go through these all the time. It's just normal part of investing. They will rebound, and they will rebound much stronger than the current downturn. But what can you do if you are looking to invest in the present environment, because the markets are available at a discount? So businesses with strong pricing power benefit in an inflationary environment. So think utilities, and then consumer staples and healthcare are non-cyclical sectors, which also are a bit defensive in nature when we are looking for an oncoming economic downturn. High cash flow generating businesses obviously are better placed to weather any economic storm, and then businesses with strong balance sheets, i.e., high cash on their balance sheet or low debt levels, will also be in a good position, because they will be able to survive much easier than businesses with poor balance sheet structure or too much debt. And also, there will be opportunities for these businesses to acquire competition, in times of turbulence, and come out stronger and bigger at the other end. So there are a lot of opportunities to invest right now. And as someone says, when you are looking at a sale, a discount, that's when you go for a purchase, rather than you wait for the discount to go away and the prices to come back up, and then you look to purchase. So have a think about that. And if you've got any questions, please feel free to get in touch. If there are any specific topics you want me to talk about, please reach out. Take care, stay safe, stay healthy, and I'll see you in a month's time.